Hey everyone, I'm here today with Jason Raznick from Benzinga. How you doing, Jason? Thanks for being here.
Thank you, John. I'm very excited to be on. Love watching your show. You're one of the best and one of the best persons I know in this world.
Oh, thanks, man. I appreciate that.
Notice I didn't say business. I said world.
World. It's a big
Yes,
place.
that's what I was going
Uh,
to. Yeah.
Thanks. I appreciate that. I always love talking to you. I know we only have like a huge amount of time, so I want to kind of just dive in and run through some things. I guess first and foremost is how did it feel when you signed the final papers on that exit? Um,
Yeah. And so,
what is it an exit though? Wait, before I go, like, because majority stake,
no,
so it's not really an exit. It's a
we sold a majority position to a private equity company called Beringer Capital. Great firm, has done deals other places. It wasn't like a complete sale. Like we could have potentially sold to large media brands that you know the names of. This is a private equity deal. And what that means is, yes, there was some cash that went to team members, take some money off the table, but it's also to invest in the business. We're actually looking at buying a couple businesses, trying to get deals done this year. So it's a put investment into it, but it's also they bought a position in the company and they want to grow it and make it to something else. But yeah, I mean, I started the company 2010, 2009, but basically 2010, and a lot of blood, sweat, tears. I guess maybe not as much blood, but anxiety, tears, sweat. Like I have videos of me in the middle of the night, waking up at 3 a.m. I'm like, what the heck am I doing? This is so anxious. I had a 3-month-old at home. I bought $3,000 or whatever, and I just freaking out. And if I didn't get help, then I don't even know if I would be here today in some respect, because mental health is a big part of all
Mhm.
this. Things happen, you think it's all whatever, and it's like your heart's beating and you feel anxious. How do you handle that mental health part of it? If I
Mhm.
didn't get help, I don't know. And I try to tell people these things that like this too shall pass kind of thing,
Mhm.
and that helped a little bit. But it's again, it's like pushing forward, not overthinking things. And then there was a lot of hard work and there was success. I mean, it's real numbers. There's a decent amount of team members. It's a profitable company. We solve problems for users. Where one of Benzinga is, if not the largest financial news wire for online, like for North American brokerages. So if you use like
Mhm.
brokerage, Ameritrade, Schwab, just name it, we're Robinhood, whatever, we're the vendor of some sort.
Right.
And we, and there's a lot of goals we have in mind, but
Yeah.
yeah, I mean, it was waking up and being on CNBC at Squawk Box, the Andrew Ross Sorkin, being there for that. I've been on before, but being there for that was definitely a proud day, I would say.
I bet. Yeah, it was really cool to see. So I was really happy for you. So you started with $3,000, a lot of stress and anxiety. And what was the initial kind of product, or what was your initial kind of model?
Yeah, and so I went to University of Michigan, and I lived on East University, so I would pretend like I was a hedge fund, East Capital, when I was like 19. And it was like I was loving looking up small cap companies, 50 million to 600 million, and doing research. Later in life, I'm like, why isn't there a news wire that just focuses on small cap stocks? Why are all these big companies on CNBC and no one's focused on the smaller companies? Let's discover them. And I'm like, well, okay, cool, but how can we expand that? There's people that are smart all over the world. So that was the original thing of like getting some smart people, share their knowledge, an options expert, an expert in telecommunications, an expert. I got really good after 9/11. I had a huge following in the defense space, security, like with scanning devices at airports. I
Mhm.
would post to Yahoo message boards. The CEOs of these companies, like Bursar, Dr. Ted Prosif, he would write to me like, I sold shares because of this. And I would post in Yahoo message boards and the stocks would move. And I didn't know. I had no money. I was just writing I'm like, if I can do the research and get this following, like, why don't we create something that's bigger and better? And that was several years later that
Mhm.
that came about. And that was the original thing. Now things take different gyrations over time, right? And
Yeah.
so and we became a news wire. We bunch of different clients that came on, and data. We were using data, like earnings data from like the biggest vendor in the world. We had Green Mountain GMC our earnings date wrong 2 quarters in a row on one of the big brokerage platforms. We're like, if you have these wrong again, we're not going to use, because they got all these complaints. So I did research. I'm like, is there a better way? Is there an easier way to do this? And we built a data team, and we believe that our data is as good, or if not better, than anyone else.
Yeah. And so now, just what are the kind of business units that you have, or kind of product lines you have? Because you do have quite a bit going on now. You have Benzinga Pro, right? You got the event side, you have the data. So what are all the kind of business units that you have?
So at the end of the day, we produce content. That's what we do. We try to make information easier to consume, so we can help people create wealth. We have our free site, benzinga.com. We have Benzinga Pro, which is a real-time. I mean, we're 24 hours. 24 hours. We have a team. We have over 100 people that work here. Benzinga Pro is real-time news, data. You'll see us break stories that'll be on TV later, like a half an hour later. We have financial newsletters on Benzinga, licensing, which is to the brokerages, etc. I mean, there's of course advertising, people doing research and opening a product, and then events. And I know events, and we do different parts of events. Oh yeah, I met your lady at your event, and you're a person that is great that helps plan your events. Never thought up there, but our events are more based on companies connecting with investors, and I don't just mean like Joe, the stock investor, but they can come. But people that really want to do deals, we get them together. We use the power of the media for reach, and these companies want reach, and they come to our event and they connect in place. They connect and enjoy themselves. And our last event in Miami had guys like Mike Tyson to the CEOs of all major brokerage companies. I mean, not brokerage, all major cannabis companies, all the major investors. And over time, we think over $1 billion in transactions have happened at our events. I mean, we know of many deals that have happened at our events, and it's about bringing connection. At the end of the day, how can we bring connection to people? Same thing you do at your amazing events in the financial space, just like how we can bring connection. So, Benzinga became more of we're a media company, but like media gets a bad rap because it's always trying to poke holes and find faults. I believe doing it the right way. We inform, we inspire, we educate. We inform, we inspire, we educate. So inform, give someone the facts, the who, what, where, why. Inspire, tell some stories of people overcoming obstacles. Like, tell those stories out there. And then educate, help give people more information to make a better decision. You don't see us saying, go buy Bitcoin, go do this. Like, give me information that can tell me in the last 16 times this happened, this is what happened. Give me information that only hedge funds used to have. The reason Benzinga Pro got created was because I was tired of people getting information ahead of others and other platforms. So Benzinga was like an uprising kind of thing. And listen, I have big dreams for what it can be. There's a lot more to do to get there, but yeah.
So then that then is basically implies then that you're pretty damn bullish on kind of financial media as an industry in general.
Yeah, I am. You got to be careful, I guess, in it, because you sometimes don't know people's interests. Like, you don't know what side they're on or why they're writing it. I'm even going to the point of a mainstream media writing a story. I remember Tesla. I think but I bought Tesla a long time ago, and it was 100 shares, which turned out to be a lot of money. How it's gone up. But when I was reading about it, and they would have interviews with executives of other auto companies, there was this guy, Bob Lutz. He'd be on CNBC all the time and talk about how Tesla is the biggest joke in the history. And so, what was his vested interest? And it's hard sometimes to understand that. And so, media as a future, absolutely. Ian Rosen, as you know, one of our good friends. I think you do stuff with him, but media is very important to get the information out. It's just sometimes what I would say, and I don't want to talk negative about Benzinga or any business, is you got to ignore it sometimes, because it can mess up how you make decisions, and how you can.
Right.
And so you want to read it to get the facts, but then take those to make your decision. So what I sometimes do, and this is, so if everyone's talking about electric, right? And media and everywhere. So then I go and I look at the thing behind the thing, and I try to figure out, okay, what's the lowest, like what's the thing that's behind the thing? So lithium, should I be buying that? So that's what you can use. You can look at it as trends as well,
Right.
But I actually think if you're not reading the media and you're not, and you don't, and like people who are technical traders, I always think you need to know the story. I think you need to know what's going on. That's what I personally do.
Yeah. Yeah. So you have that one element of being a responsible consumer of media, right, and not being led so much as using it, like you said, to inform versus ignoring it entirely, which means you're ignoring it entirely and don't know what's going on, because it is a reflection of the market in a sense.
It is. And also when you ignore stuff, you don't, I mean, there's stuff going on in the crypto space. We talked before the show. If I was reading more of it earlier, I would understand it more,
Yeah.
and it's just you want to, and that's how you find edges and advantages. Like, yes, I find edges and advantages by reading media and saying, oh, okay, this is happening, this may make sense. So when everyone was talking about electric 2 years ago, they're all talking about Tesla, and I'm like, what's the derivative play? Or and so those are examples. But then what I guess I'm just saying is, you got to be careful, because you got to see, why is someone talking their book, or why is someone negative? And that's the thing that
Right.
we try to just report and give the facts. If it's opinion, if it's like a newsletter, Benzinga newsletter idea, then like we say it. But like, here's a true thing. On Benzinga, we have a MarketFi platform it's called MarketFi, but there's a community bank investor product. In 11 years, the guy's never had a losing pick. Like 11% a year. And all he does is buy community banks. Very boring product. It's community banks. They eventually get usually bought out because the tangible book value, he knows the model, and it's just a boring product, but it's returns, whatever, great returns, and he knows his business. To me, that is exciting, because it's an expert in different areas. And I like that. John, I like when I can find an expert in different areas. It's hence why, like, I like to hang around you and follow you around sometimes, because you're an expert in the areas and
Thanks.
and so, and the other part I guess to say about media, John, in general, I know I'm going too long about this, so sorry, but there's an argument to say personalities are more important than media brands these days, or media brands can be collections of personalities. So we got to also figure that part out, because are people coming to CNBC, or are they coming to Jim Cramer, right? That's the other part.
Yeah, and
So
that's I think one of those things that I was just having this conversation with Vince Molinari over at FinTech TV the other day, because when we talk about things like, capital raise is on, like digital cap raise and things like that, a lot of people's thoughts go straight to retail investors and crowdfunding and Reg A, and I was like, whoa, like we're 12 years past, I think, when Carl Icahn tweeted about Apple and raised the market cap of Apple by like $17 billion. And it wasn't because a bunch of retail traders and investors were listening to him, right? It was like the professional investors are all online. And they follow personalities just as much as anybody else. The financial industry as a whole is full of big personalities, from Buffett to Icahn. When ARK is taking off, it's about Cathie Wood, right? Like, it's always about these personalities.
totally.
That element is like, and that's why I think, like, from an engagement standpoint, and you tell me if you agree, disagree, think I'm just completely off. From an engagement standpoint, having a personality who has opinion and worldview and perspective and credibility is probably the highest level of engagement you can get with an investor following audience. And then it kind of steps down from there, because there's an issue of scale though with a personality. Like, you have to have a personality that can reach the size of audience that you need, and not a lot of them are interesting, not a lot of them have reach. There's a whole lot of issues there, but that was kind of my view.
But it's true, but it also creates problems too, right? So let's just go John Newton. Let's just say that you're the bearish monster, okay? And you're very bearish, and you've been right, okay? And you're bearish. And let's say you're at Benzinga. What does Benzinga become known for? The bearish place, right?
Right.
So that's part of the challenges of it. But Benzinga said different people in our years earlier in the, or like 2014, I think it was, maybe 15, no, 14, I think. We had a political writer, just happened to be a guy hired in Michigan. He generated a huge following, huge. Okay, I'm telling you, articles, million page views, and those like Ron Paul type stuff. And people kept thinking we're like this front, and we had nothing to do. It was just this guy's opinion, you know. Like his last article he wrote for us was like, it was the 10 reasons there's no way Donald Trump would ever be elected as president. That was his last article. Okay, well, obviously was wrong, but he was hugely read, and we were more of a finance thing, and it was sending it like the wrong. So we ended up stopping that. But yeah, I mean, personalities can do really well if they like, and not even just personalities, just knowledge. Like we have an expert on Tesla who's like one of the best in the world.
Mhm.
And I like reading the person because I know they know what they're talking about. It's probably why we look at TechCrunch, because you know the person knows what they're talking about.
Right.
So that's with Benzinga. We do have subject matter experts now, like focusing on verticals, but we write the article and we give the facts. Now we do this thing called Benzinga Take, which is a little bit more of like, okay, this was already expected. This is that, you know, to try to give context to the news. And before we did not really do that because we just try to do the who, what, where, why. But we try to you know, give a little bit more context to the news. And in doing that, you're going to have sometimes a little bit of opinion there. You know, so
Yeah. And I think like just to, because I mean, obviously a guru model like has, yeah, like you said, huge amounts of problems. It's not appropriate for everything. I guess my point was that it is like, it is a prevalent kind of human thing that we have. And so it's one of those things that you're balancing when it comes to, like you said, information in media. And I would think too with the, well, let me step back. I compare like the growth of like your business, and I look at within the context of kind of the financial publishing industry and kind of some of the other digital information, like the Agora side of the business, that is very, very direct response heavy. It's very, very guru focused because of that. And they had, you know, for a variety of reasons, their marketing model was very dominant for a while in terms of just gross revenues and things like that. And they grew like pretty substantially before they had kind of this downturn of the last few years. You never like, I know you looked at kind of what they've done. You're aware of what they've done, but you have built a business very different from them, right? And the audience that you can get is then very different as well. So how do you like, I mean, in the early days, did you look at them with envy? Did you look at that and say, maybe we should try that? Did you say like, that's not for me fundamentally? Like, where do you feel like you kind of like view that kind of harder core direct response approach to financial markets and information?
yeah. So hearing the numbers that it, like Agora does, and you guys do on these launches, it's like, holy cow, we're working our butts off to get a licensing contract that takes 14 months and to get, and then, you know, we're blood, sweat, tears kind of thing on it. And then you see the Agora newsletters, and these guys, you know, can launch and do $1 million in a day, and then you'll tell me 3 million. It's like, whoa, like there, you know, one part of it is like there's demand for it. Two is like, I hope the demand, I hope the customers get the benefits. One of my biggest fears, John, is that people get burned out of businesses, like not burned out of like just tired, but like losing money. So like when the markets were going straight up every day, and everyone was I kept telling people like, when it's so easy to make money, trim. It's like the Warren Buffett thing, which like when it's so easy, it's too easy. And listen, I'm not to say that I'm like some expert on it, because I, you know, have made my share of mistakes. I blew up account in 2000 that is, you know, like I remember selling the only shares I had of value. I sold to Amazon at $7, and I sold it for like $2,000. Today it'd be like 2 million if I would have just kept it. But you know, so it's the newsletter industry is definitely interesting. We want to help benefit people. I think things should change over time, where people just don't use financial advisors. They get information from other people that have a knowledge base in something. So if you could tell me, John, that I could be a subscriber to the newsletter of the best municipal bond advisor, okay, that can tell me what municipal bonds are good, I could be a subscriber to someone who's options and he's good and he has
Mhm.
a track record. Why is that not as valid as using a money manager for that? Like, I think it's
Right.
just as valid. So I couldn't tell you though, John, who that is right now. I couldn't say who's that municipal bond manager. I don't think in the news industry we've done a good job at like parsing that out. And I know there's been sites like Market Watch Bot, whatever his name is, where he ranked newsletters at one point.
Holbert,
What was it? Holbert? Yeah, Holbert.
Holbert's Financial Digest back in the day.
Yep.
Yeah.
Yeah. So I
Yeah.
don't know if that ever took, but yes, we're in a different business. We're in a different business. We're more in the news wire, Dow Jones, Bloomberg kind of
Well,
world. And we have some newsletters, but like,
I think that's what I think maybe that's the reason I brought it up is that there's this kind of tacit assumption that a lot of folks and marketers have on two fronts here. One is that um, there's one way to do it, right? There's financial information is essentially this one model, right? And if they came up in the copywriting direct response kind of side of they like there's the Agora model, and this is, it's been proven, it's been decided this is the ultimate model. And it's like, no, 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 no. Like there's multiple ways of doing this. And as market cycles change, and I do feel like we're in at least the media cycle is changing, right? Like I have this long, and I won't bore you with it here because we don't have enough time, explanation of like how the rise and fall of different media models going back to the 70s from TV and newspapers and magazines to TV and infomercials to direct mail to even the early side of Google pay-per-click before the display networks really exploded. Like you'll see like direct response driven businesses at every change in the market cycle, you have the same things happen, and that dominant market player doesn't dominate the next cycle. In fact, they either if they're lucky they exit, or if they're not, then they shrink, or often sometimes even disappear entirely. And the media is because direct response is so driven by like or dependent on media costs and availability, right? So like think about Invest Tools. They sold, right, in to TD Ameritrade for a huge amount of money. But like I've talked to some of the like to Ross, some of the guys that founded it, and it's like their marketing model was dependent on local advertising to free hotel events. And as newspapers shrunk and local advertising before it got big online, it was like your ability to fill seats, and then the costs at hotels were going up. And so it was like that marketing model kind of disappeared. That seminar model disappeared for a while, and so they couldn't duplicate that. You couldn't duplicate that after that cycle changed, at least not for a long time. And so I think we're at one of those inflection points right now where the display networks and things like that, like they don't like direct response. They don't like hard claims. Like you saw Google and Facebook kick Agora off the networks for 2 years after the crypto boom, right? So I think that the issue of business and marketing model is really critical to understand or to think about, because there are some groups who your marketing is going to survive, right? And so if you think of like business as a sprint versus a race, you have a different approach. And we've seen like the rise and fall of like you've talked a lot about like the value to the end user, to the customer. And in the newsletter business, when you have that same mindset, it's fantastic. If you like you said, if you really get a real high value, and I would say Porter Stansberry, like he's kind of, that's his point. And then you see some of the other groups that were just like capitalizing on market trends. Their guys, they would put anybody they could behind a product. It didn't matter whatever sector. It's like, oh, we're now going to do a crypto product because we're doing crypto and it's hot. And the guy doesn't have any real expertise or doesn't like really know anything about it. And so there's the cult of, I always call it the cult of copy, kind of beating the cult of the customer. And when you have that in a boom cycle, like it's great, but those businesses don't ever seem to last.
And that's the question, right? And your seminars or hotels, like it's the question is like, how do you get these businesses? How do you get them to last? How do you get everlasting value? Now, when you talk about asset managers, they have AUM. It's hard to switch. The switching costs are higher. And so how do you deliver? I mean, I don't know how the seminars, hotels, how that business like stopped growing or what have you, or timeshares. I know that was big in the 90s, timeshares, and still is a big business. How do you make these businesses over time generate money for the subscribers, generate money for the vendors, and then not like the problem is like say you are doing fine and then you just want more and more and more. That's where I think it gets harder and harder, right? And then you come a little bit LCD, lowest common denominator, to get customers.
Mhm.
And then that's where it gets, you know what I mean?
Yeah, yeah, absolutely. And then you end up with all this, like it's like that hard sale and poor product is essentially your biggest extra industry risk because we saw like from a platform standpoint, they kick you off media, you can't acquire customers. We saw that's what brings in the FTC, right? Cause regulatory issues. And then you also have, which always starts with a customer complaint, right? Like, um, and then yeah, so like those things, like that's what kills not just businesses, but it kills industries, in direct response. Like it can really get out of hand and cause problems. And
Yeah,
so,
you've seen those like Kevin Trudeau's back in the day, infomercials
mhm,
selling stuff, and then it causes it causes people to start going to FTC and all this stuff. And so I don't know. It's a question, John. Like, where does the industry go? You mentioned the inflection point, and maybe it is at that inflection point. And what is it going to be, or is it more of the same? And we're just looking at it so real time right now, and the market's been down,
mhm,
and maybe we're just overplaying what you're saying. Maybe it isn't an inflection point. Maybe it's just it's just cycles, just like
right.
2008 is a cycle. And if we were out talking in 2008, we'd be like, maybe the stock market is not for us, right?
Yeah. Well, that's where I think like I mean, we know that the what is it? The investor information market. And I know you got to jump off here in a second.
No, no, we're okay. Okay.
The investor like kind of information market has been in a bull market because we had a generational shift first in how um, investors engage with information about investing, right? Like they were actually looking for information online. And then I think that bull market, and we've been in a bull market of like retail traders and investors for, you know, 10 years. I remember it was literally the first thing I talked about at the very first FMS was like, we're starting
Really?
this bull market because we had like the data from a bunch of brokers and Goldman Sachs had done a bunch of research. And so there's a bunch of stuff that I had. And now it's like the first millennials turned 40 last year, and so now we have a generation that's massive, right? Much bigger than Gen X, who is just starting to get to their saving and investing years. Like that's still coming, right? Like they're already trading way faster. We have Gen Z trading much younger. So like I think this bull market in the retail trader and investor is like this is a massive thing that's not like we're not through it. Um, and so like that part, the market's growing for sure. But I think that when I talk about an inflection point, I think that the fact that a market grows, like it doesn't mean that the people who were niche dominators will then dominate in the future, because what happens when a market grows is now bigger businesses, it's valuable enough to them to look at that industry and to look at that space. And so new competition comes um, in a lot of different forms. And I think that's what we're going to see is this kind of increase in competition, an increase in money. And so to me, and tell me if you see this different, the fact that, you know, guys like Ian and Vinay at Tiffin are coming in and buying up space, like they're raising money, they're buying up publishers and media. We're seeing exits from private equity firms coming in, like even I know you've done it, but we've seen it in other places. Like Simpler Trading did something similar with a majority recap. Like we see this happening more and more. I think more and more money. I think we're kind of on the leading edge of that, personally.
Yeah. Yeah. And so what does that lead to though? So does it lead to the acquisitions, the assemblage? Does it lead to AUM? Does it lead to like what
Mm-hmm.
or do more new places get started,
Mm-hmm.
like because the barriers to entry are low? And then and then is it just buying Google AdWords? Like what does it lead to?
Right. Well, that's the question, right? Because there is a lot of different directions it could go, and I think it leads to more media sites in general, whether their model is newsletter based. But even if it's niche, like because right now you have a lot of people who can survive with a niche trader education or publish or investor kind of newsletter, and I think that we'll see that happen with um, the way that anybody in who raises AUM, like who has to do capital development for any type of thing on an ongoing basis. Like I think we'll see more and more media kind of activity, really, with different existing kind of financial model or investing models out there besides just the newsletter model. So I think that the building of audience is, one of those areas that's going to be kind of the forefront of competition, I guess, going forward for anybody involved in cap raise in all its forms.
Got it. Yeah, I mean, that's building the audience is key. And then, but when this is the part that I get scared of, John, when these companies, these newer companies get in trouble or things happen, do investors say, all right, I'm going to go back to the old line companies. I'm going to go back to just like, what our grandfather used, the Wells Fargo, and not to say it's bad. I'm just saying like, we want to make sure these new companies, it's like, I wish there was like a proving ground for these new companies to go through something. Like there's media sites out there, John, that are just automated articles or fake stuff just to get traffic. They literally, well, I'm not joking. There's a firm in New York, they literally like change narrations just to get traffic. And that's their whole story. And so it's like, it's you got to be consumer beware, but I agree with you. Users that are engaged. I mean, that's why you have like Ben Shapiro who can, build a huge business, or Bill O'Reilly did, or I mean, in all types of industries. And that's why Jim Cramer like is his own chairman's club, right? Like, I don't know the revenue it's doing, but I have to imagine it's large, very large.
Yeah. Well, I'm still blown away. We had Jared, who's the president of Cardone Industries, at one of our panels in FMS, and I'm still shocked that they raised like $870 million off of Instagram for a real estate fund. Like, that blows my mind.
Yeah. I mean, and that's all. I was supposed to interview Grant, and then it's all he uses a thing, creates a following, and says, here's his stuff, and they 870 million. And there's real investors there, and it is crazy, it is crazy. Like that's what he said off of one Instagram. That's a serious number.
Yeah. And so I don't want to keep, I actually really want to keep going with you, because I have like this long list of things that I wanted to get to. So maybe I can get you to come back, because I know we're bumping up against.
Yeah, we can do it. We could do a second one on like hiring, behind the scenes, how this became what it is. I don't know. I mean, you definitely have good guests on here. I'm probably, one of the weaker ones, but
no, I legitimately love talking to you, man. I do, because I think you think about the business and the industry and the digital environment different than I do, because I come from a direct response kind of background, and as I try and like understand this stuff, like talking to people who are smarter than me is kind of how I figure out stuff and learn. And so I would love to keep talking.
Yeah, I would too. And then hopefully you can refer us some good people to hire too. So yeah, I mean, this is a crazy week, but I look forward to being on again. John, thank you. I'm a fan. I've been a long time fan. If you don't know John Knudsen and you're just randomly hearing me on here, subscribe.
Thanks, man. I appreciate that. All right.
Yeah.